How will consumer behavior and technology change the future of financial services? I wanted to find out, so I recently chatted with Brett King, the author of Bank 2.0 and a renowned advisor to some of the world's largest financial services and brands. Banking 2.0. What is Banking 2.0?
I guess I refer to it as the next version of banking, which is a big shift in the way consumers behave and the way they interact, given banking in our lives. Because today, banks have this concept that you come to them and they make you jump through all these hoops, and if you're lucky, they'll let you be their customer. But that's really changing as a result of technology.
Well, it has changed, right? There's a wonderful set of iPhone apps for almost, actually any kind of app, Android apps too, for most of the major institutions. Chase has a great iBanking app for mobile, and also they're pretty good online. So is that more indicative of the future, or is there more to come?
Well, there's definitely more to come, particularly with NFC, near-field contactless technologies that's integrated into the handset. The need for physical plastic credit cards will disappear, and then the use of cash will start to decline. So how does that affect your perception of a bank in your day-to-day life? There's a real question.
So I've heard, look, we've all heard that the paperless office is going to exist. We're going to be done with paper because everything's going to be done by computer or on computer, and yet any office you go into, there's mounds and mounds and mounds of paper. Cash, I think the stat I saw was that over 90% of transactions worldwide are still done in cash. Cash comes with a lot of things that are nice about it. The number one thing is that there's no imperial involvement. So how do you think this is going to impact?
Well, I don't think 90% of transactions are cash. I mean, in the UK and the US, debit cards already exceeding cash transactions on a daily basis. I guess the question is, in terms of modality, what happens next? If I can take my phone out and I can put in $50 and I can tap my phone to your phone and initiate a payment, why would I go to an ATM machine and draw cash out? Certainly, why would I go to my bag, pull out a checkbook, write a check, and then give that to you via the post so you can then go down the branch, wait in line for 15 minutes to cash the piece of paper?
I mean, look, this all sounds fabulous. I do a lot of it. I have a wonderful little thing on the back of my phone right now that was given to me by my credit card company. You just slap it on the back and it works in the cabs. That's wonderful stuff. But some people really like cash, or they like to physically do things, and they don't trust that newfangled technology. How are the behaviors? Is there going to be a sort of a socio-techno divide where some people above this age won't do it and some people under will? And how do you see that all playing out?
I talk about 3 phases of disruption. It started with the internet. That changed our choice and control in respect to interaction. Then mobility, which changed our expectations of being able to do stuff on the move. And then NFC, the 3rd phase. But if you look at the Y-Gen...
NFC stands for?
Near-field communication.
Communication, that's right. Okay, great.
But if you look at the Y-Gen and the digital natives, they've only grown up knowing a world with mobile phones, internet, these sorts of things. So their expectations are that they'll be able to do things faster and easier. Now, you might say, what about the older generation who are used to cash and checks? Well, our behaviour's changed as well. If 15 years ago I asked you how much of your email you did on your BlackBerry, you would say, what's email?
Right. Well, Brett King, Bank 2.0, I assume it's on Amazon.com?
Absolutely.
I'm looking forward to that. Brett King, thank you so very much for being here.
Thanks for your time, Shelly.
I'm Shelly Palmer, and you are going to Bank 2.0 at Live Digital.